Hello and welcome to the Friday wrap up brought to you by David Gokhstein and the Gokhstein News Network. I'm your host, Landy, and today is March 13th, 2026, and we're looking at Bitcoin here on the daily to start. We will take a look at some commodities and wider markets here in just a moment, but there's not actually too much to talk about with Bitcoin other than, we got target hit to the upside in lower term time frames. We had Bitcoin trade above that 72.2 region right up to the 74 to 75 area that we've been talking about, with another strike right at $74,000. So not very surprised by this after we saw how Bitcoin was holding up around the 70,500 level in lower term timeframes. And much as I discussed on Wednesday during the check-in, I said, we have to see in order to really get a nice move up above the 74 to 75 K range, we would need to see a daily close at minimum, likely to try and come up and test the 78 to 80. Well, we got a rejection. No, we didn't quite even swing the high. I think the high was just shy. 73,968. You can call it 74, but just shy of this 74.1 region. And, we didn't get any lower term time frame closes or higher term time frame closes, so Bitcoin sticks to the range. The range is still on the high side of the tighter range, 70,500 to 72.2. And if we do see this come back down, this is an inverted hammer, this is ugly. If we do see this come back down below 70,400, which is yesterday's low, then I would look at this as a lower high close with some bull bait to boot. So just be aware that if it trades back below right around the 69 to upper $68,000 level here by these two swings from Wednesday and Thursday respectively, then I would be looking for this to come back down to, somewhere around, 67 and a half or so, somewhere around the midline here. But realistically, probably headed towards the actual higher low around the bottom side of the range. Excuse my voice here. It's been a long week and I am losing my voice. I apologize. But somewhere around that 65 to 65 and a half higher low and $65,000 area of support. Now, if we do see that area lost, again, right down to the close open area here that was swung right at around 62 and a half. That is the primary downside zone of interest for this range. And if it is lost, then we're looking mid to low 60s. I'm sorry, below the mid to low 60s, we're looking for a swing of $58,000 to $60,000. That is still where the 200 period simple moving average is on the weekly. And, if that's dropped, looking mid to low 50s, somewhere around 55 to 50 to 54, and then all the way down to a weekly at 52 and a half right here. If we saw any kind of concerted effort for a move below there, 48 to 50, and we're going to discuss this in just a moment. So again, need to see closes. At minimum, I would like to see like an hourly 4 hours start to really close above and take out the high side structure here to start marching towards that 78 to 80. And you do want to see a daily close above around 74 to 75 if it hasn't already tried to push up. Otherwise, it's right back in range. This was set up for a rejection. Let's take a look at that real quick. Right around the two major moving averages here, that being the 50 period simple moving average right in the top side of the range here now, and the 55 EMA. So if we did get a move up above that 74.1 to $75,000 by the upper third, then I would be looking for a move towards the 70 to 80 by the 100 period exponential moving average, and maybe even a swing above into the low $80,000 region by the 800 period EMA. Otherwise, it's set up to head right back down. And if it doesn't hold the bottom of the range, it's probably going to swing the low and possibly go for low. Not too crazy. Pretty expected. I think what people were not really expecting was for Bitcoin to hold up with Dixie pumping because oil is pumping. And, that's something that we saw the end of 22 into 2023 as well. When Dixie was pumping, we got the correlation of Bitcoin pumping with it for a little while. And it really wasn't until Dixie made the real, concerted move to the downside that we actually saw things really break into that bull market structure. But we'll see. We'll see what's in store. The weekly here, pretty straightforward. As I mentioned, anything here or higher on closes would set a low, but now I do need to see that 74 to 75K area break on dailies to start looking for that mean reversion towards the basis and 100 period EMA on the weekly overhead. And that would put Bitcoin back to the upside here at that 78 to 80 for a retest. And that, of course, is a close open area of interest. And we've been spiking right around the low, and this is that major low on the monthly, daily and weekly, of course, at 74.4, but also the high side structure over here from 2024 prior to the halving at 73.835. So spiked right to it. Anywhere above there, we could look for some, mid to low $80,000 action by the close open and swings up here of the range overhead. Closes above the 200 period exponential moving average would get a lot of people excited, and especially if it's at a low. Just be careful that if it doesn't actually close above 74.1 and does start to head back to the downside, we're looking for that lower second 200 SMA as a swing area below $60,000 between 58 to 60, and then continuation to the mid to low 50s, and then possibly 48 to 50 down by the 377 if it got rolling that way. So we'll see what this weekend has in store for us. If it does close here, 70,500 to realistically above the close open here at around 70,300 or so, you would say a technical closing low set, and that would set the swing low as a major low, but doesn't do too much in terms of structure. Now, let's go ahead and take a look at commodities. We'll start with oil because that's on everybody's mind right now. The weekly is ugly. Pretty easy to see kind of, what we would need to see play out for continuation. That'd be, back above the high inside of this macro zone overhead between 115 and 130. This is going to be around the same zone for Brent, but this is WTI. If we did see closes above there, then we could look up to 130 if it hadn't already hit it, and then significantly further up to the 140 to 150 area, which is another macro area of interest. And then, of course, back below one of the key levels over here on the daily, we've got 83.28. But I would say below $85, which is the upper second standard deviation, we'd be looking for mean reversion back down to the $75 region around the 200 period simple moving average and upper first. Anywhere below there, looking back to the upper 60s, 68 to 70 down by the supports. Now, for the daily, this is actually playing out much like what I talked about, right? Like a move to 98 to $100 for WTI in this case. We got a close at 99.30, and I was looking for that on any kind of a close or even lower term time frame move above $95. So we had the area of interest here between 90 and $95 a barrel. We did get a close above the upper second here. That does bring into play, and the close open high, that does bring into play, 105 to 110 by the upper third on the daily, potentially even a retest of the highs or swing of the highs there at the 115 to 120 area. Now, I'd be very, very cautious if you see this getting bid up there again, that it could just come right back up, swing the highs, or fall short, or even fall within the actual wick here, where the open was 98 and the swing was right around that 119.5, 120 area. I would exercise caution in here because this could be an area where we see a rejection. The last higher low on the daily is now 76, so any drop below there and $75 at the basis, that's where we're looking at the 68 to 70 down here with a cluster of moving averages, and of course the main support that we've been watching since last year, when oil came down here, well, as far back as 23 realistically on the top side of the structure, but 24 into 25, and then the big macro double bottom down here that was telling us that this was very highly likely going to make a big old move to the upside, and boy did it. Didn't need to know what happened. The chart was telling us what was coming up, at least for price action. So weekly, again, it's a macro area. We did not see any closes below the swing low here at 55.61. So that 55 to essentially $68 being a key area. And we saw no macro breakdown. In fact, a close open right at that 57.48, which was a close open major macro low as well prior. But this is a big trend break. So unless this becomes a deviation by closing back below $90 or 95 here, we could be looking at longer term sustained upside price action with daily corrections and weekly corrections in between. But for right now, we got to watch how this daily plays out into next week. And I'm sure we'll find plenty of news if it does head back to the downside. And of course, if it heads back to the upside, it will make big headlines, and you're going to see it here on the price chart first before you find out about it in the news. So keep a close eye on it. Gold, I warned of a possible lower high. We did get that lower high at 52.40, and we did break back to the lows right around 5K. So now if we do see the lows dropped at 5K, look for, around 48 to 5K as the next big area to play in, right around the major moving averages here, at 49. But if it does drop, 48.40, 48 even, I'd be looking for expansion to the downside towards that 45 to 4,600 by the 100 period EMA. Could swing through to 4,500 as well. And then the big area to pay attention to is all the way down here at 4,400. Now, weekly looks like, it didn't quite get the close below the swing low of the prior weekly, but it came close. It's still sitting on the upper first standard deviation, so beware if it doesn't break down that it could hold and try to go for the upside, especially above that 52.40 area. But realistically, if it does start dropping below 5K, looking right to that next swing low, you could even rope in the close open there at 49, which is, right in that 48 to 5K area where I would expect the daily to start playing. Anywhere below there, we're looking, 45 to 46. And then, of course, 44 being the massive swing low down there. Silver, we'll stay on the weekly here. Lower high on the weekly, whereas gold set that high. Silver did set a lower high, although it's a technical lower high. I would have wanted to see it drop around $78 an ounce. But if it does drop that, we're looking, 75 even to 76 here at the close open is fair game. It's sitting on the top side of the close opens over here. But if it does drop that, pay very close attention to 70 to 72 right around the basis band. If it drops anywhere below there, we're looking mid 60s to low $60 even if it starts to get rolling below this swing low, and that would be a structure break on higher term time frames like a weekly. Daily is ugly, and anywhere below $74 an ounce would be expansion into support. Then it'd be all about the expansion through support at $70 down to that 64 to 65 an ounce low. If it takes out the high at 90, then we can start entertaining trips back to 93 to 95 up here, and then potentially expansion to 98 to 102 initially, and then much more on the table if it got rolling to the upside there. Natural gas did fall back to supports around the 310 region, and I would say that this is a consolidation. If it drops the lows below the 280 region, I'm looking at 250. If it does manage to get back above the 350 to 360 region, we can start looking 390 to $4 pretty quickly thereafter. This is a lower low. Ugly. If it did start to close below, right around the 280 region, we can start looking 250, 260, and then potentially more to the downside there for natural gas. Let's look at traditional markets, and then we'll wrap this up. We got a very ugly close. This is a broken structure on Dow. This is where, I would say, we hit our downside target. We hit 46.5, and that was expected. That's the low over here, when dropping back below the 47K region. Next big area to the downside would be this major weekly that I've been pointing out, which is right around 46,250 to the where we have a cluster of EMAs, or we have the lower second and then a 55 EMA and the 50 SMA, right down towards that 45.5 region. If we dropped anywhere below there, 45 is the red line. That would look really ugly. But that's where we would head, probably on expansion, significantly lower to the 43.8 region, 43.5 region. Now on the daily, we just need to see 48,220 taken out to the upside for a trend break, and then it's all about holding the lows. This is right around the 200 period simple moving average. I talked about that earlier in the week. Futures hit their 200s, and now we've got we got follow through on the index. So same for the NASDAQ, right around the 200 SMA. If we drop 24K, we're looking at 23.8 and potentially much further down. Needs to take out 25.2 here, 25 to 25.2. And if we see 25 broken above, that's 25.2 is probably where things end. If it can push further above, we need to see 25 4 to 5 taken out to the upside to really get rolling back up over the top side of this consolidation. Weekly, ugly. Be careful though. If you're short, this is big sell-off territory into a lower second, into a major area of support. So, granted, we could see on any drop of 23.7 to 8, we could see 23.5, but and even 23 if we got a big swing down below on volatility. But beware, 23 to upper 22s down here, but beware of any buybacks back above there if that were to occur. And again, need to see 25 to 25.2 broken above. It's also the weekly basis band. That's going to roll down a little bit. It's currently sitting at 25.2. It's going to be more around like 25K. SPY 662 was the close for the daily here. We'll go to the daily because it closed just below the low here at 662.50. Headed towards the 200s that are crossing right in that big area. I was originally looking for 655 to 665. We got that not once but twice. Next area would be right around 650 to the 200s here at 658. If that is dropped, there's areas that can swing in the mid 640s over here to 640, but we could potentially see a much larger sell-off to the bottom side in the 630s and maybe even more if it got really, really nasty and everything's rolling over. I would be looking, anywhere from 620 to 625, but that's a little aggressive for right now. I would see how it holds up if it gets to support, and it needs to take out 683 to 685 to the upside, break the downtrend. Then we can start looking, 690 to 693 up here, and then potentially 695, and go on a breakout back to the upside above the highs towards 700 and 705 respectively. I would watch VIX. Obviously, if markets are rolling over in this case, it would be on expansion. This is still sticking to this rising channel. And we still have a lot of people, as I mentioned, on Wednesday. And I don't know if I mentioned it Monday, but, above 30, you get a lot of DCAing and value buyers into the markets on 30 and above for VIX. And, we didn't quite hit a 30 read, did we? Yeah, 28.50. If we did see that, I think that we would see, if we see markets continue to roll to the downside, what I would be looking for is for this to spike significantly higher into the 30s, low 40s or more, because volatility would really get rolling to the downside below the lower seconds on the dailies for those indexes. So Dow, NASDAQ, SPY, so on and so forth. But yeah, one of the big things that you're still seeing going on is Dixie got bid up and actually closed. This is pretty big for Dixie. It closed above the 150 cent region. Next big area would be 101 to essentially 102 by the 800 period exponential. If this turns around, you're probably seeing it coincide with oil coming back down below 99.50, 99.60. It can go to 99 even. And if it drops it, that's where we're looking at 98 to 98.5, right around the midline. And you'd want to see structure break below 98.5 here on the daily. And I would watch oil pretty carefully. So if it rejects in and around the highs or fails to get to the overhead resistance at that, 115 to 130 big zone overhead, then I would look for this to turn around and try to head to the downside. It looks powerful right now, to be quite honest. But, we'll just have to wait and see. Right overhead is the 100 period moving average, exponential, and then the 200 right at that 101 area. So just watch it. I would be looking for the possibility of a rejection in these areas. Even though the weekly did close above, it could swing higher and then come right back down. That would not be abnormal. It's got some juice to it, though. I mean, if this were to get continuation past, 102, we're looking 103, 103 and a half by the 200 period simple moving average overhead. That would likely result in oil playing back to its highs and potentially even higher into that zone at 115, 130, maybe even going for a breakout above that 130 region. But I'm not totally confident in that with the way that oil is set up right now for WTI. Granted, it's going to be the same kind of look for Brent. Brent is a little bit more strong to the upside here. And just keep a close eye on it. Midline is actually right around the basis for both on the swing low for the daily higher low. But that's a strong high that was put in right at macro resistance. So oil would have to start closing dailies above there and really rip into the upside for it to continue. And that's likely where we see where we would see Dixie continuing up 101 to 102 and then possibly above to 103, 103 and a half. So keep a close eye on it. Next week should be interesting. That's for sure. We did get some economic data. I'm going to sear your eyeballs, but I'll go over some of this next week. We got some preliminary GDP quarter over quarter and came in interesting. I'd like to walk through it. And, core PCE coming in even, some stuff like that with durable goods, preliminary GDP price index quarter over quarter as well with a 0.2% projection tick up. But we will we'll see how that goes with some of the actual information that's going to come out next week. So there isn't too much until Wednesday of next week when we're going to get core PPI and PPI month over month. And then we'll see the Fed's funds rate next Wednesday as well. So, and see if there's any rate decisions there, whether it's likely going to be a hold but we'll see. We shall see. And I will talk to you again on Monday, probably in the afternoon for you on the East Coast if you're in the United States, at 12:15 p.m. And on the West Coast, that would be 9:15 a.m. on Monday on the Breakdown with David. And then, of course, I will have a video out after close of day at 8 p.m. Eastern, 5 p.m. Pacific is when markets close. I'll get the videos out. I'll have to do the recording after, so video will come out 9 p.m. and 6 p.m. respectively. So have a great weekend. Have a great morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.